Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 11th through September 15th, where our theme for this week's weekly trading game plan is Patience Pays in the stock market. If you all have been around our BeachBum trading community for any length of time, you've heard me use this adage for a long time and multiple times that patience pays in the stock market, and the misspelling of patience is intentional, where we're stressing that patience pays. And after we do our market analysis, etc., we'll talk about some strategies, some trade ideas about how you can also utilize this adage and have patience pay for you in the stock market as well. So let's get started. Here's our Google document with our notes for part one of our weekly trading game plan for the trading week of September 11th through September 15th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document with these notes in the description box below. We store all of our notes, our Google documents with our notes for this week and previous week's weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to these notes as well as notes from previous weekly trading game plans via the direct link to this publicly accessible Google Drive folder in the description box below as well. Our notes also contain links to bonus videos, the tools, resources, etc. we use to do our market analysis, our strategies, etc. Good morning, Ricky Khan. Thank you for joining us in live chat today. Hope you've been doing well. So we'll jump over to Finviz and we'll do our market analysis. We'll see how the markets ended up on Friday. So we see all the indices eked out a very small gain after dipping slightly negative, bounced back and ended the day just slightly positive. We had about a 50-50 split, 46% advancing, 48% declining, only 23% new highs, 77% new lows. We only have 30% above their 50-day moving average, 70% below, and 43% above their 200-day, 57 below. So generally a bearish indicator, although again at the end of the day we saw that little push up. The market on close candle was positive and pushed the NASDAQ positive and S&P slightly more positive. So we see from the heat map, Friday it was pretty much a flight to safety. We see the FANG stocks, the mega cap tech stocks are also a flight to safety. So again, we saw people piling into those, although NVIDIA, Tesla, probably some profit taking in those areas. Healthcare slightly positive. Energy's been positive. Utilities again, and we'll see that in the groups and sectors. Again, more of a flight to safety. Welcome, MD, Alan Krentz. Thank you for joining us. Hope you all are doing well. So some of the recent news, boomers may be blamed for housing imbalance. We've got the G20 summit going on, so we'll see if we get any global news coming out of that. Talk about the call for peace in Ukraine. NASDAQ year-long dream rally. Indices finish higher. Weekly post-weekly losses. We see oil, as we'll see the futures, it bounced up above about 88 and then retreated down to 87. As we'll see in the futures, it's now oil is trading between 85 and 90 at this point. Definitely on an uptrend. Natural gas still range bound between 250 and 3. Gold broke down below that 1950 resistance or support level. Now that's acting as resistance. See all the futures for the indices are currently pointing down. We'll see the dollar strengthen. DXY last I saw was up over 105. See weakness in the yen, euro, many of the foreign currencies. And we see the short term of the Treasury curve. Yields went up, and all of them are now, around 4.3, 5 years almost 4.4, and we still got a pretty significant inversion in the bond yields. Welcome, Easy Mike. Thank you for joining us. Hope you're doing well. we'll look at each of the indices. See again, pretty range bound, generally, declining. We got to September. We talked about last week the seasonality, historical performance of September, and as we'll see as we go forward in the futures, etc., pretty much all the markets rolled over at the start of September. Pretty much everyone's talking about it. All the seasoned traders know September is historically the weakest month of the year, so we probably saw quite a bit of profit taking. If we go into a longer term chart, we can see a slight bounce, then a rollover. We're still sitting above that moving average, so we've got some downside to go, and then quite a bit of downside before that longer term moving average. Qs. NASDAQ, again, very similar. So we saw that little bounce up and then a rollover this week, first week of September. We'll again see that more pronounced in the futures. Again, we've got some room, above the most recent low, above the moving average, and then quite a bit below the longer term moving average. Dow. Very similar, a little flatter. So again, the Dow's pretty much getting support from its near-term moving average, trading pretty much flat, choppy flat. Russell, again, very similar to the Dow. It's kind of hugging that near-term moving average, chopping up and down, pretty much flat, trading laterally. Look at the VIX. Just a very brief pop up in the VIX. I think it hit maybe 18, 16, bounced up over 16. Again, as we'll see in the futures, each spike in the VIX is quickly retracing. Again, now it's sitting under 15. I think the actual VIX is now back under 14 already. So again, these spikes are very short-lived in the VIX right now. Talked about that for quite a while. So Ellen is asking how the waves are. The waves right now, if you go to our Discord or our Twitter and see the sunrise beach pictures, you'll see the waves right now. There's really none, but as Lee and some of these hurricanes pass off the East Coast, we expect to get some waves this week. So we'll look at the groups, the sectors for Friday and for the longer term. So we see Friday, again, kind of a risk off. Energy utilities, we've seen this, oscillation in utilities, although the longer term trend for utilities, as we'll see, has been down. Technology was pretty much even. Basic materials is slightly negative. Real estate slightly negative on Friday. Again, the theme for the week's energy. Basic materials got hit. Industrials got hit. Technology, again, for the week was generally negative. Again, energy, top performer for the month. Technology, communication services have kind of been rotating in and out of that sector. Defensives was very negative. Again, utilities very negative. So the longer term trend in utilities was negative, although again, we saw that rotation into utilities on Friday. So again, for the quarter, utilities and real estate were the most negative, energy the most positive. So again, we can kind of, on these risk-off moves, we can expect a sector rotation into utilities, somewhat into real estate, although real estate, again, is going to be sensitive to the 10-year Treasury bond yield, which then affects mortgage rates. So kind of watch the Treasury bond yield to see how that's going to impact real estate in general. So again, industries for Friday, mostly energy, some REITs, some real estate, some agricultural, utilities, again, sector rotation into utilities on Friday. Weakest sectors, some basic materials, silver and gold, we'll see, been weak. Again, we got dollar strength, so They're sensitive to that strengthening dollar. Again, for the week, energy, uranium's been strong, continues to be strong. Again, generally for the week, REITs were negative. Again, we'll talk more about that. You're hearing more people talk about potential opportunities into the REITs, back into the REITs. We see silver gold, took a hit. Solar, again, strong rotation in and out of solar. Silver, very negative for this week. Again, uranium for the month's been very strong. And again, solar's been very weak. Mortgages, pharmaceuticals. So, and the theme, for the quarter, energy, you see the strength in energy. So let me grab a quick drink. And we will go over, I'll bring up the economic data calendar and investing.com. We'll talk about some of the highlights I pointed out for the week, and then we'll look at what else economic data we had last week, and then look at what economic data we have coming up for the following week. So hopefully you all enjoyed your long weekend last weekend, enjoyed your Labor Day weekend, had some time off and to recharge for this week, spend time with family and friends. So the only notable economic data that I captured was the jobless claims on Friday. So we saw continuing claims was a little bit less than expected, initial claims less than expected. So again, the job market continues to show resiliency. That caused some market concern that okay, the Fed's going to need to raise rates. We'll also see productivity was less than expected, and labor costs was higher than expected. So again, potential inflation, wage price spiral type thing, and that caused a little bit of concern, but not anything major on Friday. Although we did see the markets decline and then initially recover. We also saw the dollar strengthen, etc. Just a quick reminder, this upcoming Friday, the 15th, is the September options expiration date. So slightly, earlier options expiration this month. So just be aware of that if you have options or are looking to play options this week. So let's jump over to the economic calendar, see what else. So car sales, truck sales, slight decline. I've also heard used car prices are going down a little bit. Factory orders, negative, but better than expected. See the bill auctions, mortgage rates from on Wednesday were a little bit lower, but again, we saw the yields push up towards the end of the week. Got Fed officials talking, so that may cause some volatility. ISM manufacturing, it's was relatively strong. Crude oil stock down significantly, although again we still see the oil prices pushing up above 85 towards 90. And we talked about jobless claims, natural gas storage, a build, but less than expected. And again, we see natural gas prices kind of range bound between 250 and 3. Again, oil inventories were down significantly, but doesn't seem to be impacting the price as much. And wholesale inventory slightly down. Baker Hughes rigs, so we had just a slight increase in rigs. So pretty much stable at this point. Look at for next week. So inflation expectations. So we'll see if that comes in hotter than expected. Again, some Fed officials talking, mortgage rates. We get core CPI. So this is Wednesday. So core CPI is one of the primary factors the Fed looks at. So if that comes in hotter than expected, expect that to hit the markets, increase volatility. So we'll get some market reaction to the CPI data. Typical oil, natural gas inventories. And Thursday we get PPI and initial claims. And Wednesday, Thursday, again, inflationary data on both the consumer side and producer side. Get retail sales for August. So August, other than the back to school, might be a little bit weak. Natural gas storage, and then just some manufacturing and industrial data, and then the Michigan consumer sentiment. So again, last time this Michigan consumer sentiment data actually had more of an impact on the markets than it typically does. So we'll be seeing, how does the consumer see inflation, the longer term inflationary outlook, as well as current conditions. So Wednesday, Thursday, Friday, potential economic data that may, impact the markets, impact volatility as well. So I hope that all helps. Welcome, Flip of the Shippa. Hope you're doing well. Thank you for joining us. Look at the earnings calendar. Again, we should be wrapping up this earnings season. So again, you can go through though. We got Oracle on the 11th, so they'll be talking AI. So we might get some more AI type news. Fuel cells, some biotechs, several smaller biotechs. Again, definitely lightening up. So you can see who's remaining to report earnings for this season and what potential impact that may have on anything you're looking at here. And in a second, I'll show you a shorter term schedule for earnings that we can also find in Webull. Thursday is Adobe. So again, they'll probably talk more AI as well. And some more biotechs, etc. So also the next Fed meeting is September 19th and 20th. So probably, going into the next couple of weeks, we'll talk more about what the outlook looks like for another interest rate hike in September versus October, November, etc. And again, as this economic data comes out, those probabilities of a rate hike will likely oscillate based on that data. Let me grab a quick drink and we'll jump over to the Webull market screen and look at the data we have available there. Just a quick reminder, you can still get up to 12 free stocks with Webull. If you're not already using Webull, you can see we use Webull for our market analysis, due diligence, our trading, etc. So if you're not already using Webull, we recommend it. And if you'd use the affiliate link found in the description box below, you can also help support our BeachBum trading community. I'm using the online browser version of Webull. This is the market screen. Like to do some market analysis using the market screen in Webull. We can see the histogram of advancers to decliners, so more decliners than advancers, but the percentage of decline was small, quite a few that were unchanged. We see the net inflow into the NYSE, again, stronger on Friday than the NASDAQ. Typically, the past several weeks, we've seen this outflow of cash out of the NASDAQ on Fridays and inflow into the NYSE. So that trend continues. Welcome, Walter Lyons. Glad to see you. Hope you're doing well. Thank you for joining us. So again, you can see a near-term earnings calendar here in this section, in the calendar section in the market screen in Webull. Just click on earnings. You can also see dividends and splits. You can see the release time, whether it's in, again, this is near-term. So you can see if it's before market open, after market close, or during market hours. Look at the best performing industries for the week. So again, energy, coal, oil, pretty good. Consumer goods, pretty negative. Utility split. Food and drug, negative. Utilities, again, kind of split, slightly positive. And energy, again, uranium's been very strong. Got the ETFs. Look at the markets. So India bull, positive India. Again, we've got the G20 summit in India. Small caps. So up on the Russell, up on small caps, up on the Dow. So Dow positive right now. S&P is short small caps. So again, several short small caps on the S&P side. VIX, again, short the VIX. Again, it's, tends to retrace pretty quickly. Russell showing small caps positive, so that's interesting. The S&P version is showing negative, and the Russell is showing positive. Looks like a somewhat of a split. China positive. China's been pretty volatile. Europe positive. Industries, again, energy, oil, natural gas. Utilities were strong on Friday. Industrial's pretty negative. Healthcare negative. Energy very positive. Cyclicals kind of split. Again, negative basic materials. Mostly negative technology. Defensive, again, from Friday we saw flight to safety, defensives, utilities, somewhat negative on real estate. Looks like mortgages were positive. Financial services was positive on Friday. Commodities, copper, gasoline, natural gas. So somewhat of a bounce in copper. We'll see that in the futures as well. Commodity curve, that's interesting. Broad commodities. We got Asia, positive 3 to 7 tips, 0 coupon bonds, extended duration. And Canada and Euro, dollar showing positive, the other showing negative. So we'll jump over to the futures as well. Look at the futures in Finviz. Here we can really see that pronounced rollover in September. You see, we hit September, all the indices pretty much rolled over. Again, we talked in detail yesterday about the September effect. Sometimes they call it the September slump. Again, we'll reference that video again later. But again, September's historically, the worst trading month, and most people know that. They're talking about it, and so I'm not surprised. We see this self-fulfilling prophecy, probably some profit taking, and all the indices rolled over at the start of September. We'll see how deep, these declines go. We can see we've got some room, till we get to the most recent bottom. So again, the trends are definitely down, and we should trade accordingly. Again, we've got plenty of strategies about how to trade a down trending market, and you can find those on our BeachBum trading channel. Typically, they're listed under bear market, although I guess someone mentioned that I think the S&P's technically in a bear market. I don't know if the NASDAQ is technically in a bear market, but that's 20% from the most recent high. But generally, I wouldn't consider it an overall bear market. I think the longer term trend is still positive, but we'll get this short term decline, and we want to trade accordingly and position ourselves accordingly. See that dramatic drop off in the Russell. Small caps looks like it's testing its recent bottom. So we'll see if that support holds or if it breaks down further. Nikkei rolled over, Europe decline, DAX decline. Again, we saw that brief spike of the VIX over 16, pretty rapid retracement. And we see that strong upward trend off of 80 in oil. So it broke through 85, broke through a previous high. Now it's trading between 85 and 90. So the trend definitely up. We'll see how far that continues. Natural gas, again, pretty range bound between 250 and 3. So it tests 250, bounces off, goes up to 280 something, up to 3. So again, pretty range bound, plenty of opportunities. Short-term trading, volatility in the ETFs are, we'll point out cold and boil long, cold, KOLD short. If you want to, gush would be long on oil, drip short. We see again, gold tested that at 1980, rolled over, broke down slightly below 1950. We'll see. It'll have to re-break that resistance point at 1950, and then longer term, the trend should be upward. I did look for some seasonality trends in gold and silver, and I think, again, longer term, I think the trend is up, but I think we're going to continue to see these cyclical oscillations. So again, there's ETFs we have for shorter term trading. If you want to trade these cycles in gold, or GDXU is the long. I think Dust is one of the shorts, and we have several in our ETF spreadsheet we can look at. Similarly, silver, you see it rolled over, hit 825, rolled over. We'll see if it tests that 22-ish, 20-ish range. Again, there's good ETFs for trading these cycles in silver. AGQ we like long, and ZSL is the one for short. Very similar with copper. Palladium's pretty bottoming, keeps going lower. Platinum looks like it's going to test its bottom. And then we'll talk about some of the agricultural products. Corn and wheat have come down quite a bit. And we're watching the ETF that we'll point out as well, WEAT, on wheat, and try to play one of these bounces in wheat as well. Lumber's come down a bit. And we see, there was a short-term bounce in the prices of bonds. Yields came down a little bit and then went back up. So again, we talked about the seasonality trend in TLT and 20-year Treasury bonds. So we're waiting for a seasonal bottom in those bonds. So again, we'll expect the general trend is down on price, up in yield. So we'll continue to watch that. And there are shorter term ETFs. You can play these short term oscillations also in treasuries. Again, we see the dollar strengthened up over 105. We had yen weakness, euro weakness, also Chinese yuan weakness. So we'll see if that upward strength in the dollar continues, although it looks like maybe we're topping out at that 105, and maybe we'll get a slight retracement. That would help our dollar-denominated commodities as well. So I hope that all helps. Again, welcome the Crow. Glad to see you. Thank you for joining us. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content should be considered for education and entertainment purposes only. So let me open up our ETF spreadsheet and grab a drink. And we'll look at some of those ETFs we just mentioned. If anybody in the chat has a particular topic, commodity, index, etc., for which you'd like to look at ETFs, just let me know, and we can look at those specifically in a minute. Okay, just a quick reminder, if you'd like access to our ETF Google Sheet, as well as our dividend payers and our puts ROIC Google Sheets 24/7, you can get access to these ETF as well as dividend payers, etc. Google Sheets by joining our Patreon at the All Access or VIP level. You can find a link in the description box below, and you can also help support our BeachBum trading community. And we also have a series of videos on ETFs and how you can use these Google Sheets in our ETF playlist. So I'll also, let me bring up the technology component screener that we have in our ETF Google Sheet, so we can look at the various technology components via this technology component screener in the screener tab. You can also see we have a number of other screeners available to help you find individual stocks that you can use, again, via this Google Sheet. Thought this was kind of interesting. And the reason I wanted to jump over here is I was just seeing Lab U and Lab D. So we see biotech's Lab U's, has this double bottom. It's, coming back down to that bottom. That might be an interesting opportunity. It's also interesting that the other components have now formed a declining channel within an overall upwardly trending channel. And those trend lines seem to be pretty good resistance. So we see FANG-U bounced off its SOXL and the overall NASDAQ. So I think this screener could be very helpful to watch how it behaves. You notice they're forming almost into a wedge between that upwardly trending, the lower trend line of that upwardly trending channel, and the upper trend line of the declining channel. So it'll be interesting, and we might see, narrower oscillations as we approach the point of those wedges. So I thought that was interesting, and hopefully that will help you as well. So again, you can see Lab U and Lab D. So you can see, it's approaching its 52-week low, that bottom. So again, you can trade biotech, Lab U, Lab D. We talked about, we made some money on MJ a while ago. It's still trending upward. Got MJ, MSOS. Trading China, yin and yang. I believe several of our BeachBum traders have been, short-term trading those oscillations in China. There's also several others. Copper, and it's still, above its 52-week high or 52-week low. So we'll be talking about dry bulk shipping again tomorrow. Again, plenty of ETFs. You can trade energy as well as the components. So yeah, GDXU, we talked about, short-term trading of gold and silver. So GDXU long, GLL is a short. Talked about India's been strong. So natural gas, again, coal and boil. Also several others, UNG. Talked about oil, gush and drip. Again, for short term, right now, the trend in oil is pretty strong to the upside. It's also UCO long, SCO short. Someone was mentioning the Russell and small caps. So I think the Crow mentioned TZA. So there's a couple that you can trade small caps up and down. These are leveraged ETFs. Again, long TNA, short TZA, as well as the Russell. There's URTY up, SRTY down. And then we talked about bonds and TBT, short, and then TMF or TLT, long. We talked about volatility, UVXY, SVXY, the leverage for trading volatility. And again, I mentioned wheat. We're going to talk tomorrow in more detail. You can see WEAT is the ETF for swinging wheat, and it's pretty close to its 52-week low. And again, we're looking at potential opportunities for swing trade again in wheat. We've made money using this WAT in the past. We'll see if we can do that again. Welcome, Sydney Osborne. Thank you for joining us. Glad to see you. So if anybody in the chat has some other ETFs you want to quickly look at, please throw them up there. Otherwise, I'll continue. And let me grab a drink, check if anyone has any other ETFs, and then we'll talk about our strategies, themes for the week, trade ideas, etc. Okay, again, our theme for the week is Patience Pays in the stock market. And again, if you've been around for a while, you've probably heard me post this many times. And that's one of the adages I believe in, that patience pays. And our swing trading strategy is very much a longer term swing trading strategy that requires, and I think part of our success has been being patient and waiting for these trades to present themselves attractively, and then again using these strategies to make money trading in the stock market, using a lot of patience. And also another thing I say is intestinal fortitude, that sometimes being patient requires some intestinal fortitude. Things might go red for a while, and you have to be able to let the trade play out until it becomes profitable. Previously, we did another similar video last year called Don't Move Until You See It, where we talked about a number of strategies for patiently waiting for trades to present themselves to you, to develop, and how trading can be an analogy for trading can be chess. And I always like that quote from searching for Bobby Fischer. So we've cut that out, those strategies out into a separate video that you can now access via the bonus link in the notes, and we'll release that as soon as we're able. But I won't reiterate those particular strategies. You can see those in that video, also in the notes from that weekly trading game plan from last year. Again, talking more about, waiting to see trade that is attractive, that fits your trading style, your strategies before you, enter a trade. So I want to talk more about the Paytience Pays side of it. So on trade entry, being patient to wait for, the trade to reach an attractive entry point, looking for it to, reach a support level and an attractive price, where the risk reward profile is what you're looking for. We typically look for a 2-to-1 risk reward profile. I'm looking for it to stabilize at a support level, have supporting, orders in the bid in the level 2. And then, sometimes that takes, being patient, waiting several days for that to develop. And as the price decreases, obviously your potential risk reward can increase significantly. So again, being patient, waiting for a good price with good support to enter the trade will pay significantly when you eventually exit it. Similarly, on a trade exit, another adage you'll hear quite frequently is let your winners run. So when something starts to run, it gets exciting. You want to take profits. You want to let your winners run. Really, making significant money is by allowing your winners to run while still protecting your profits. I believe in, as something runs up, I manually move a stop under my, protecting my profits so that if it does quickly reverse, I'm still, I've still got profit. Crow says he agrees. I double my profits by trading 30% less. Yes, by being choosy, by being patient, finding those trades that fit your style, your risk reward profile, you're going to make more money. But again, it takes patience, and that can be very difficult sometimes. Again, we use longer term swing trades. Some examples are commodities. We were just talking about silver, gold, oil, etc. Semiconductors also have a commodity cycle that's been disrupted a little bit with the NVIDIA AI GPUs. It's again disrupted the typical oversupply, over demand, double ordering type of commodity cycle we see in semiconductors. But again, I expect we'll see that semiconductors again as well. But that's one of the reasons we like commodities so much, is they have this nice long-term cycle. The cycle can be different lengths of time for different types of commodities. They can also be very seasonal, so we've got seasonal trades. We've also talked about seasonality in some of the sectors. So we've been talking about treasuries, even going just a year back and looking at, okay, where was this a year, where did it hit bottom last year or the past several years, and then using that to determine possible attractive entries for going forward. Other things, again, are very seasonal, based on holiday seasons, etc. The seasonality in the markets, which we typically try to present each month, etc. What are the seasonality factors, and then we want to kind of front run these trends in commodities as well as the seasonality factors. So we want to get in as things bottom and turn back up. That's we want to get in before that. Now, if we don't get the absolute bottom, that's okay. It's getting that longer term swing and making significant profit on that longer term swing trade. So I hope that those ideas, those strategies help you also apply, this adage that patience pays in the stock market. If anybody else has any ideas about how to utilize that strategy, benefit from that adage, we'd love to hear it in the comments. etc. Also, again, we talked about September, how September is historically the worst month of trading. We talked about that in more detail last week, and we released those strategies into a separate video that, again, you can access via this link as well as on our BeachBum Trading YouTube channel. We've also got some shorts out about how the stock markets perform in September and what are the best performing sectors and industries in September. And then a more detailed one about the September effect. What does that mean, etc. That, again, you can access all those via the links in our notes, as well as on our BeachBum Trading YouTube channel. Similarly, for the summer, we're closing out the summer. We'll be headed into fall. And again, you can hear about the seasonality of the summer as well. And when we get to fall, again, we'll do something similar for the fall. Tomorrow, in addition to selecting our top swing trading stocks to watch based on this market analysis, these strategies, etc., we'll also talk about dividend-paying stocks and other related strategy with Paytience Pays. Is we like to, if we're going to potentially hold a stock through one of these cycles, ideally a dividend paying stock is great because we get paid while we wait. So again, we'll talk and we'll look at dividend payers in more detail tomorrow, and again select those that are going to pay us while we wait while we patiently wait for these long-term swing trades to play out. And also we utilize option strategies, and we'll talk about how we can also use covered call strategies to get paid while we wait, and use puts, selling puts in the declining market to also make money, and wait for better trades to present themselves. Okay, let me grab a quick drink, check the chat. If anyone has any questions or topics you'd like to discuss for a few minutes, we can do that. And if anyone in the chat has any, if I missed your question before, I apologize. Please throw it back up in the chat, and we'll try to answer that question now. Also, if you have a question that you think of later, please put it in the comments to this video. Also, you can put it in our free Discord. Our Discord's free to join. So you can find a link to our free Discord in the description box below. We can continue these chats, as well as, again, you can ask any questions in our free Discord. If you want to ask us, you can tag us by, we're BeachBum Trading, no numbers, no pounds. So anyone else is an imposter. BeachBum Trading, lowercase. Again, no numbers, no pounds. We'll get rid of that imposter when we finish. Also, you can find that invite to our Discord, as well as links to our social media. We've got a Reddit community, a Facebook group, and you can contact us via any of our social media sites on our homepage, which is beachbumtrading.com, bum without the U. So again, plenty of ways you can contact us, ask questions. And again, our Discord's got a great community of traders, so if I can't answer the question, or possibly another of your fellow BeachBum traders can answer your question, particularly if it's a style of trading. We have channels for different styles of trading, different asset classes. So if it's not a style or asset class that we typically trade, then your fellow BeachBum traders can also help you answer those questions. So we encourage you all to also join our Discord, actively participate, help each other out. Again, we've got a great community, as you can see in the chat, helping each other out, sharing trade ideas. Again, helping, that's our goal, is to help you make money trading, help you succeed in your trading career. Also, we welcome any suggestions for improving our weekly trading game plans or any of our videos, any of our content. Please let us know. Again, comments in the Discord, etc. What can we do to add more value for all of our BeachBum traders? That is our goal, to add value to you in our overall community. So let us know how we can improve and provide the most value possible. Okay. If no one else has any immediate questions, we'll wrap up for part 1. So again, we hope you'll come back tomorrow at 10 a.m. Eastern Time for part 2, where we will select, based on all this market analysis, strategies, trade ideas, we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, shopping lists. We'll again also talk about our dividend payers strategies, our option strategies, etc. So we hope you all will also join us for part 2 tomorrow, and have a great rest of your day.